Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Jodie Gunzberg. She's Manager Director at CoinDesk Indexes to discuss what will drive Bitcoin to $70,000. Jodie, it's great to see you as always. Welcome back to Trade Talks. And it's so interesting when you trade crypto and these key levels that they trade at. You remember just a few minutes as we turn the calendar to 2021, Bitcoin hit 30,000. So it's interesting to see how they hit these peaks and levels here. And there's three key areas behind your thesis to Bitcoin 70,000. Let's start with inflation and why crypto, like Bitcoin, is sensitive to it.
Yeah, thanks, Jill. I think $70,000 is really important because there's such an important psychological level behind that. It seems like at any of the tens of thousands that happens. But we got a really high CPI number last week, as you know, and investors are looking to reduce their dollar exposure and increase allocations to Bitcoin for a strong inflation protection since it is priced in dollars. So it has an inverse relationship. And in fact, Bitcoin has an inflation beta near 60, which means a 1% increase in inflation results in a 60% increase in the returns of Bitcoin. So a very small allocation to Bitcoin can go a long way in helping protect against inflation, and you need far less of it than any other asset to get the same inflation hedge. So you only need just about a tenth of stocks or even just a third of the allocation to oil, which is the most volatile component of CPI.
Right. What about year-end rebalancing?
Yeah, the year-end rebalancing could be huge. Because as you can imagine, traditional investors are going through their asset allocations and are probably weighting more to Bitcoin as stocks are at their all-time highs and fixed income yields are historically low. Just think about it. Where would you rather put your money, right? And even the crypto investors, I think, are letting it ride and even doubling down after a really spectacular year. They aren't selling Bitcoin to buy stocks. So we've also noticed that the larger holders of Bitcoin have refrained from the same level of profit taking that we saw earlier this year, which is taking significant selling pressure off the market. So I would look at this year-end rebalancing as a huge potential driver to push us over that $70,000 mark.
What are your thoughts around these new products and the impact to the move in Bitcoin with the different ETFs that we've seen come out?
Yeah, the new products are clearly showing demand. Not all products are created equally. Even the first Bitcoin futures ETF in the US now has over $1.5 billion. And while it's not a product that I would recommend, it certainly shows demand is strong. And now, if any spot ETFs do get approved in the US anytime soon, I think it would be incredibly bullish, not just from assets flowing in to hold long, but as traders would use both the spot and futures and strategies to isolate the roll yield. So in the meantime, I think while we wait for the SEC to approve the spot Bitcoin ETFs, which may take some time now, we can use the Canadian spot ETF, which also has over $1.5 billion of US dollars tracking it. So I think that this is really showing the development of the market that, again, could push us over the $70,000 mark.
And Jodie, to wrap up here, what are the risks to the $70,000 thesis?
Yeah, I think two of the key risks. One is this infrastructure bill, which is including a rule that brokers need to disclose the names and addresses of customers. But the big problem with that is that the definition is expanded to people like minors who don't have customers in the traditional sense. So it makes it difficult to comply with tax reporting requirements. And this has led some of the crypto advocates to warn that critical elements of the crypto economy might actually leave the United States. And the bill also requires that transactions more than 10,000 be reported to the IRS with requirements of information like the social security numbers from the senders. So that with the use of the 1099 forms to report gains, it could hinder that $70,000 level. I don't think we've seen a pullback yet from it, but that would be a major thing, with this spot ETF rejection. So those are the two things that I think would be detrimental to the price rise. But I think that the upside is far greater here than any of the risks to the downside.
All right, Jodie, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.